Hey traders, welcome back. Following last week's video, which was very popular with you guys, it had over 1,000 views within the first week. I wanted to share with you another insight into the London live room this week, which we took a trade on the dollar yen. But this week was one of those weeks that was very slow in the markets, and it's typically known as one of those testing weeks for newbie traders, rookie traders. They get shaken out of the market because they're trying to be in a trade. They're trying to force trades. Nothing's happening and they feel like they should be in a trade, so they make something up and they lose money. So, again, it's about trading your plan with discipline, consistency. Trading isn't always about being in a trade. I said it before, I'll keep saying it again until you guys get it. But hopefully you can see and get value from the analysis we did on the dollar yen. I hope you guys aren't using it as a shortcut, because although the London Live Room does provide a massive shortcut to your trading, it's not by watching these videos. These videos are just one out of my entire portfolio. Okay, there's no way to gain consistency. I hope you're getting value from the analysis, and really it's a demonstration of what we do in there each day, but just by watching these videos is not going to make you a successful trader. You need to be in that live room, surrounded by like-minded people, and have that tunnel vision. Being in the live room does provide you with a shortcut, but that shortcut is by blocking out all of those attractive other systems, okay, shiny objects, and you just focus on the plan that you're developing and building up on that, building and gaining discretion on that plan. So have a look at the analysis we did here. We took a trade on the dollar yen. Hopefully you get value from this, and I'll talk to you after the video.
Yeah, if we drop out to the dollar yen, okay, on this pair, you can see that we're bearish, right? And there's nothing looking left. There's nothing looking left until we get to 110. 110 flat would be the area I'd want to pay attention to. So, if we did the same analysis here, okay, and we got a bat pattern, what do you think I'm going to say? Okay, so look, I'm expecting here. I'm expecting a move to here. This is the difference between this pair and this pair. This pair, we're at previous structure resistance. I'm expecting a retest of this low. This pair, I'm expecting consider extended targets, yeah. We're going to move over to the dollar yen now, where you can see that I've got orders on already. Nearly about 80 pips down towards target 1, which would be nice if we can get that filled. But I'll explain what we're looking at here. I'll just take off these drawing tools. So, dollar yen. Unlike the other pairs, we're bearish still. Bearish, bearish, bearish. A broken close below structure. We've violated these levels of structure, and we've broken close below. Now, the next level of structure is where? Where would you pay attention to here? Shoot some prices in. Yeah, 110. This even handle down here, which is this next previous level of structure resistance. Could provide some support like it has done on all these other pairs that we've been looking at. The next low is down here at 106. Now we can see that we've found a little bit of support down here at 112s, and we're retracing back. Typically you just get these smaller levels of consolidation here. See this? You don't really get the outside returns that come down into previous structure, and that's just one of the personalities of this pair. And what you're seeing here now is, going back to what I'm talking about, is you're seeing this little consolidation levels break down, right? And I'll show you down on the 60. We identified this little wedge pattern here, and then we saw this breakdown. So as we come up to test this level, this is going to be a good area to pay attention to, because it should provide some resistance. We saw this level tested once, twice, 3 times, come down, held again, and then broke down. Okay, we saw this divergence here, putting in this little descending wedge pattern, broke down, we come up, and where do we come up to? Previous structure, right? Previous structure. So first of all, I'm identifying this area as a potential shorting opportunity. Now, I look for RSI to go overbought. It was massively overbought, 88.5. And then again, you start drawing out more confirmation. So you bring on Fibonacci retracement tool. You can bring it on from this high here. You get a 618, 50%. Okay, and you just start drawing out this area. Drawing out this zone. You've got previous structure here. But just based on these wedge patterns, we've got 1618 extension here. Okay, but just based on these wedge patterns, look, that 1618 lining up with this previous structure support, this area would be a good level to get involved in a short. Now, if we bring on our Fibonacci retracement from this swing high to swing low, bat pattern. So guess what? If you trade bat patterns, you're getting involved anyway. But we are looking for a trend continuation, right? We're looking for a trend continuation. So depending on what you do with your targets, you might use this bat pattern as an excuse to look for extended targets. Now let's look at the dollar yen. So we had a bat pattern here. So I know some of you guys entered the bat, but I was really just looking at this as a structure-based trade. We had all this support here, broken close below, and as we came up, I'm expecting this to become resistant. So I was looking at the RSI. RSI went massively overbought, and yeah, I entered at 114.64. Okay, and I was looking for targets down at the 382. Okay, and I'm looking for target 2s down here, and I've actually got them just above the 112 even handle. Again, that's another price that I've paid attention to in the past, and I've got target 2s just sitting above that. Now, in fact, I haven't even set my target 2 yet. I'm going to do that in just a minute. So I think I've got about 165 pips or something to target 1. Something like that. And if this move plays out, it'll be nice. There'll be a nice profit out of this one. Okay guys, so following the market close on Friday, I just thought I'd update you on this, something to look into next week. Those of you who are taking this short, what we did is we essentially came down, we hit target 1s at around 165 pips, and I've got my limit orders down here for target 2s just above the 112 even handle. Now the reason for that is over historical sampling, I've found that this is one of those price levels that market usually has some sort of reaction at. It respects this level. If you go out to the weeklies or the even the daily charts or even the monthly charts, you're going to see that price action reacts at that 112 level. It's always good to have knowledge of these price levels which market reacts to, because there are good levels to identify on your charts and know that when price action comes down to these levels, you know what to be aware of. So that's where my target 2 is. We're down at about 225 pips at the moment. Now what we're looking to do is to lock in profits by trailing our stops. You guys know that initially my stops were above this high. As market comes down, you can see that we put in this little outside return, break and close below. Okay, then which means we can trail our stops to above this high. Now I'm not saying, you know, you put it very tight against that high. I'm talking ATR or whatever your conventional stop placement method is to give the market enough breathing room. And as market comes up and breaks and close below, you've locked in some profits by trailing your stops above this high. Now what you can see is we've had this outside return and another break and close below, which means just before the close I trailed my stops to below this high. So we've locked in profit.
Okay guys, so that's it. Hope you enjoyed this video as much as the last one. Really shows you how you need to analyze those areas for targets just as much as entries for the trade, and also it gives you a demonstration on how you can trail your stops to lock in those targets. So share this video around guys, because we're really trying to get out the message that, you know, trading isn't about jumping from system to system. As I always say, it's about sticking to your plan and building on that plan to develop consistency, which will allow you to trade your plan with discipline. So for you guys that are in the London live room, I'll see you in there on Tuesday. And until next time, take care.